It's really important to understand that gold, in essence, is taking over the place of the Treasury. And when you realize that this settlement currency, they will mint. So he says to me, by the way, these countries like China, who have been wickedly accumulating gold, they will do all they can to back their currency by gold. Russia, too, because the basket of 60% currencies, they want their currency to comprise the majority of that basket by gold backing it. They're the ones buying all the gold. We already know that the other 40% is gold in kilobars that will be deliverable upon demand. And this is why they don't want to tell us how much gold they have. Until it's surprise, we have way more than anybody else. And guess what? We're backing our yuan or renminbi to it. And so when you see these baskets of 60% BRICS currencies, 40% gold, it will be the currencies most likely, according to Vince, who's one smart dude who worked on the Chicago Board of Trade for a long time. He's probably right. They will back their currencies with gold. This is such a big deal. I don't think people get it, and yet not a word out of the mainstream, not a word at all. When bonds are sold more than they are bought, rates rise, more supply than demand. When bonds are bought more than they are sold, rates fall, more demand than supply. And with countries around the world dumping our treasuries in record amounts, like China, like Russia, like Japan, who's selling massive amounts of debt to defend their collapsing yen, when this is happening, if there were not a buyer that could buy bonds in the unlimited amounts, then rates would rise. It's as if the Fed has stepped in and is buying them already. And we're supposed to believe that countries like the United Kingdom and Ireland and Cayman Islands are now replacing these massive buyers of our treasury who have really our creditors who have allowed us to live beyond our means. These are the countries that are already massively in debt, like the UK. So you got an indebted country like the UK buying our debt when we're the biggest debtor of all time, which is just being sold in order to finance the interest on the debt that's already out there. This is a very bad thing. We haven't reached a point yet where there's been such a massive demand for delivery that it overwhelms the system. But I would argue we have never, ever, ever, ever been closer. I believe there is a collective realization by these countries that this is how you beat the West, is by standing for delivery. It is an option you can do. And all it will take is one big bullion bank, which when I say bullion bank, JP Morgan, Bank of America, Deutsche Bank, HSBC, these are not just bullion banks. These are the biggest banks in the world that are systemically tied together. One of them fails to deliver. Bernie Madoff situation, Ponzi scheme realization, and everyone runs as fast as they can. Give me my stuff, where the whole thing implodes, and it's a daisy chain reaction. We haven't seen that, fortunately, yet, but it is a Ponzi scheme that they are running in every sense of the word. And this is probably why we are seeing such massive deliveries. 30,000 contracts delivered for the June gold contract off of COMEX. It's 3 million ounces of gold. A few weeks before that, 500 million ounces of gold, or $500 million worth of gold delivered to BRICS Hong Kong, which, by the way, most people don't know. In 2015, the CME group, which is the COMEX, created a contract that is deliverable in Hong Kong to a BRICS facility, which is a COMEX facility. And it's interesting that delivery was all in kilobars. Kilobars are what is traded on the Shanghai Metals Exchange. It is not traded on COMEX. Most of what is traded in COMEX is 100-ounce bars, but they do have mini contracts where they do have kilobars. Everything that was delivered to Hong Kong 5 weeks ago was kilos. The theory is these countries, through proxy banks or sovereign wealth funds, will buy massive amounts. They will short the paper price in the West, stand for delivery in China at BRICS Hong Kong, massive amounts of gold and silver, and then immediately truck it over to the Shanghai Metals Exchange, where it can be sold to the rest of the world, like Iran, who can sell their oil to China for yuan and then immediately convert it into gold on the Shanghai Gold Exchange for immediate delivery. It is a cash and carry exchange. There has been so much demand going in and out of these exchanges in Shanghai that over the past 75 days, it's increased by over 200% in terms of volume, which is now surpasses the COMEX market. The Shanghai Gold Exchange and the Shanghai Futures Exchange, when combined, now surpassed the volume of COMEX, making it the second most significant metals market in the world behind the LBMA. And so we are seeing a system where gold and silver in physical possession is being recognized as the most important thing by the most important and well-informed traders on the globe. So when we talk about gold and silver, to me, again, it is wealth, and it is wealth free from counterparty risk. But what's interesting right now is that Shanghai Futures is standing for delivery. And I believe that this is a proxy for the PBOC. Who holds a margin account of 21 billion yuan or 31 tons of gold and massive amounts in silver futures and standing for delivery? We keep seeing large amounts of gold leaving the COMEX and going to China through a contract that was developed in 2015 by the CME group that allows for delivery to BRICS Hong Kong, which is a COMEX facility. It is then trucked to the Shanghai exchange as all metal has to go through there, and it's disappearing off the exchange. Is it the PBOC doing it? Don't know. But what I am simply trying to say to you is that because gold is so important right now, and he opened my eyes to Shanghai Futures and saying this is the PBOC by proxy, and I believe it, because I think it's become very evident where gold fits into the equation. And here again, with positive real return in the Treasury market, a strong dollar, outflows out of the ETFs, and very weak demand here in the United States, well, logic would tell us, geez, the price of gold ought to be cratering. But here we are at all-time highs today. And if you look at how gold has performed in most of the currencies around the world, even including the Canadian dollar, I mean, in most currencies, it's pretty damn close to doubled or more over the last 2 years or 3 years. And so there is an amazing amount of demand for gold at a level above all of us. And that's what people need to understand. I've been trying to hammer home. Do not listen to the rhetoric. Do not look at the price. It is the ultimate tool of misdirection. When you see someone standing up against JP Morgan with a margin account that has control of 31 tons of gold, and they've been standing for delivery, what more do you need to know? When you see India buy 1.5 times the amount of gold they bought all of last year and bring it home, along with 100 metric tons that they've held since 1991 at the Bank of England, what the hell more do you need to know? They tell us are all fugazi. You can't believe them. Inflation is way higher than they're telling us. And this is a politicized event by the Fed to lower rates 2 months before the election. And, you know, if they do it, fine. But I think it's stupid, and they'll never normalize their balance sheet. And it just signals to the world, why the hell would you want to sell us your oil or your commodities for a currency that once again will give in to inflation over austerity? And once again is rigged. I mean, it's rigged in every way, even in the way that they measure all of the numbers to gauge their policy decision, including unemployment numbers. And if they hired John Williams instead of the Bureau of Labor Statistics, maybe we would be able to direct monetary policy to right the ship. But what they are doing by giving in and lowering rates is the worst thing that they can do, and just giving up on ever getting this house in order. And, you know, it would start with stop spending.